Being an investor is never easy, but the first few months of 2022 have been especially tough. Rapid developments in the global economy, markets, and geopolitics have left many feeling confused and concerned about what comes next. Is the U.S. Federal Reserve trying to create a recession to choke off inflation? Are supply chain disruptions the new normal? Is the rout in global fixed income set to get even worse? Will the Russia-Ukraine war stoke major new tensions between the U.S. and China? But of all the questions we hear every day, there's one that comes up more than any other. What should I do now with my portfolio? In Mid-Year Outlook 2022, we'll give you Citi Global Wealth's answers to these and other critical questions. The global economy has endured a series of shocks over the last couple of years. COVID shutdowns, unprecedented stimulus, supply chain seize-ups, and Russia's invasion of Ukraine have all created significant challenges. The most obvious result of these shocks is inflation. Across developed economies, consumer prices have been rising faster than they have in decades. In response, policymakers are withdrawing the fiscal and monetary boost they provided when COVID first struck. The U.S. Federal Reserve is leading the way, signaling some of the biggest annual interest rate increases in its history. But we think there's a clear danger that the Fed will go too far. The global economy is already slowing as high inflation and less stimulus hit consumer spending. Now we forecast global growth of around 2.6% in both 2022 and 23. A full percentage lower than our previous expectations. We also believe the worst of the U.S. consumer price inflation is already behind us, with a decline to around 3.5% likely in 2023. If we are correct, the peak in interest rates should occur in 2022. But if the Fed proves overly aggressive, there's a very real risk of tipping the U.S. needlessly into recession. So what does all this mean for markets? At Citi Global Wealth Investments, we believe the global economy can weather the storm, and we're positioning for the risks and potential opportunities that we see ahead. We've already made important adaptations in our tactical asset allocation in 2022. These include an overweight position in natural resources and oil service equities. Amid scarcity and supply shocks, we think these assets may help reinforce portfolios. Another of our key calls focuses on high-quality fixed income. Bonds have suffered a brutal run in 2022, selling off hard on monetary tightening fears. As their prices have gotten crushed, yields have risen substantially. Given this uplift in yields, we have a positive message. Bonds are back. We believe that many high-quality bonds can now help seek portfolio income once more. We also highlight the role they've often played in seeking to diversify equity risk. Now we re-emphasize the unstoppable trends that are transforming the world around us. While many growth-oriented investments have struggled in 2022, we see a compelling long-term case for the digital disruptors that are reshaping the world around us. We also seek exposure to the ongoing rise of Asia, including regional players who stand to benefit from the U.S.-China rivalry. Amid today's adversity, we believe there is opportunity if you're looking in the right places. Midway through 2022, many investors are frozen in a state of indecision. But our view is that this is a time for taking positive action while avoiding certain costly mistakes. With markets volatile, you may be tempted to sit in cash and wait for a lower entry point. But long experience has shown that attempts at market timing are almost always doomed to fail. We believe being fully invested in a globally diversified allocation remains the best course of action. We also warn of the risk of keeping portfolios static, positioned for conditions in years gone by. An ever-changing world calls for dynamic allocations, with the focus right now on quality and resilience. As your partner and guide, we stand ready to help you add that quality and resilience to your portfolio. In Mid-Year Outlook 2022, we'll show you how.